But are you able to extrapolate anything from 5 names that we just talked about? 5 with bad numbers, bad sales, bad guidance. Is that a bigger market theme? Or really, is this time the weather to blame?
Yeah, you know, I hate to use the weather as much as you do in terms of missing a quarter, and I think that's always going to be the case. But department stores in general are fighting a pretty good battle right now, and they've done a lot in the last 12 to 18 months. Shut down square footage, brought in some remodeling, really doing a great job to try to fix some of the problems they have, getting creative with delivery options. But right now, they're fighting against Amazon, and that's always going to be a difficult thing. But they're fighting against a generation of millennials that would rather have an experience than something of substance.
Well, yeah, listen, the weather is this easy thing. Oh, it's the weather. But I have to say, as Jim Cramer pointed out yesterday, I mean, it has rained in the Northeast almost every day for about a year and a half.
Right.
And you're not going to Home Depot when you can't plant, when your yard is a disaster. You don't want to go shopping when it's 55 degrees and pouring rain outside. Do you think the consumer is indeed weakening this much? Or maybe is this a false tell for the market and the consumer?
I don't think it's a very good read, and I don't think we should look into any one quarter. If you wanted to look back and say, well, actually, Home Depot did better, considering what the weather looked like.
They're buying buckets and mops.
And Macy's actually had a pretty good print. So, when you think about how much work is being done by this department store chains, and they've got more work to do, but they're actually shrinking their square footage, and they're actually, revitalizing the stores and making it a more exciting experience. It's just a difficult environment.
Overall, let's talk now about the trade fight, the trade war, whatever you want to call it. Do you see a resolution, or is the market overestimating the odds of a real fix here? Because both sides, there was a little bit of thaw today with the China ambassador to America. Both sides, otherwise, Art, seem to kind of be digging in their heels.
Yeah, what's hard to know is on our side, does the administration think this is something they should carry into the election cycle, or is this something like to have behind them before the election cycle? And I think it's the latter. I also think that this administration has shown some flexibility by not escalating on autos. I think that's a very important sign. I think they backed off a little bit on the Huawei, and I think that's a good sign. And they have yet to escalate on the whole Megillah. They haven't gone after that $325 billion. That still kind of hangs out there as a threat. I think it's as important to both, but I think we're showing more flexibility. Probably happens this year, but unfortunately, it's going to be the story to talk about for most of this year.
Well, how much does the Fed play? And we got the Fed minutes out later on today, and we keep hearing this theme that while trade is a big story, nobody's saying it is not,
right,
that if the Fed continues to get dovish, that could almost supersede trade concerns.
Yeah, what is stronger, monetary policy or trade policy? And right now, monetary policy in general is probably more important to us. I think with the numbers just, matter much more about what the Fed is doing. But I think extrapolating out to say the Fed is actually going to cut this year because we're having a difficult trade war with China is not the right way to look at this. If, in fact, that manifests itself in negative economic data, certainly the Fed could not just pivot, but start to get even more dovish. But
well, look at the bond market, 2.42 on the 10-year, Art. Is the bond market saying the economy's slowing, or is the bond market also kind of a false tell because there's so much capital, so much cash out there, currency reserves, that countries have no place to put it but our bonds, and it has nothing to do with fears of a slowdown?
100% the latter. That's the problem. I mean, that attractive yield, even though it's 2.4%, compared to the other safety yields, the other 10-year bonds around the country, is just too attractive, and it attracts too much capital. That's exactly why we're where we are.
Yeah.